Actually, the market readiness is probably one of the hardest things to diligence, and also a very common reason why we sometimes pass on opportunities. My name is Irina. I'm a partner at Atomico. Atomico is one of the largest venture capital funds in Europe, investing kind of at Series A or beyond, although Series A is changing shape these days. And I'm a partner in the in our early stage team. So I mainly lead investments in Series A, B companies. I am one of the two partners that focuses on our B2B and enterprise investing. A lot of it starts with the founder and the way the founder thinks about the product and why they're building what they're building. That means a few things. That means, do they have a differentiated insight into the industry they're building in? Do they have a deep thinking about the product and how they're going to build it? Do they have the kind of right commercial mindset, or have someone in the team that has it around how you actually build and scale a commercial proposition in that space? We also look at the potential of the market and the market readiness. Actually, the market readiness is probably one of the hardest things to diligence, and also a very common reason why we sometimes pass on opportunities. The nature of our fund means that we have to look for opportunities that have this kind of like multi-billion-dollar potential, which means markets that are uncapped to some extent, or they're capped at a high like billion-dollar mark, and also that where the market is actually ready to adopt at scale quickly, or relatively quickly, right? Like if the market's 20 years away, it's much harder. And I think that's probably one thing I spent a lot of time on, in addition to the founder and the team. Then the other thing we look for is the ability of the founder to recruit a strong team around them, and self-awareness around where their strengths are and where they actually need to bring in complementary talent, and what that caliber of the talent is. It's always a great sign if people that could have gotten a lot of other roles decide to join a Series A startup, then take a huge risk maybe for their careers, and also a financial risk. So that's always super important. And then the other thing we look at is, customer feedback. At the end of the day, that's one of the most powerful tools we have in terms of diligence. Like, what do customers say? Is there that sort of like customer love that you would expect, that solves a really big pain point, that the product solves a really big pain point? So, I mean, it's a very like a multi-parameter equation that we're trying to solve. And then we also think about how can we add value, and are we best positioned as an investor to support and help this company grow. And if we actually feel we don't, then I think we think twice. But we definitely think of that part as well. Not be too labeled by the fact that you're a C startup or not. Like, it doesn't matter so much where you're from. It matters where you're building, what you're building, the space you're building in. There's a lot of other elements and geographic considerations. I think in terms of like geographic considerations, use the advantage you have, I guess, in terms of like recruiting talent, retaining them, because some of these markets, while they're competitive, they're less competitive than other ecosystems. So you can still hire high caliber talent that stays, and that's powerful. I would say, use the local investor network. Even if they don't invest in you, you can still get to know them and so on, because they often provide a bridge to like the later stage investors. And then try and build relationships with a European and US ecosystem sooner, as soon as you have something to say, and try and build that relationship with investors and with customers and so on as soon as possible. And think global. There is no reason to not think global. Think very quickly beyond like the boundaries of the market, or how your customer base or how your local enterprise customer, for instance, system think about the global market. Because don't have commercial milestones, you have technical milestones, and you have to make sure you're working towards the right technical milestones that match the capital, what the capital expects you to show, right? What the capital providers expect you to show. So I think there you need to think a little bit more about that, and not undercapitalize, plan for all the buffers of things being delayed because you are working on sometimes unknown technical challenges. I think in vertical sectors, there's always particularities of various industries. In health tech, I think when you're selling clinical software, it's very different when you're selling non-clinical software, which means that kind of the challenges and the regulatory barriers are much higher in one than in the other. And therefore you have to build your business and plan again your journey accordingly. But I think overall, I would say it's still a great time to build vertical software in these industries that have now started to digitize. The one caveat is, sometimes it's very easy to think that because it's obvious, the market is going to adopt it, and there are realities of complacent industries where adoption may take longer, and thinking about how to circumvent that and how to trigger that adoption, what product you sell to whom first, from a commercial perspective is worth it, because they're still quite conservative spaces.